Alright guys, so this is a big one. We have heard the standard narrative that China is collapsing and the economy is doomed, but is it really? We have seen a slew of innovation and industry shocks coming out of Beijing. China's dominance of electric vehicles is clear. Next was the shock from DeepSeek that really sent shockwaves across US big tech. We shouldn't forget about that as well. And when it comes to financial innovation, Beijing is beginning to catch up, and their first priority is to build an entire financial system decoupled from the West. Now, consider what China is seeing from them. The financial aggression isn't over. Even as the US plans to de escalate with Russia, the European Union, the EU, is ramping up their economic war. Europe is moving forward to fully seize the frozen Russian reserves of $200 billion. This amount of assets could be taken away forever. Now, the justification is extremely bizarre. France wants to hold the money hostage to seize the money should Russia ever violate a future ceasefire deal. But regardless of the outcome, it still means the money is stuck in EU institutions. The Russians can't access it, use it, or transfer it out. Now, any country would be alarmed, especially if you are China. You see the risk involved with any money trapped in the Western system. They can get weaponized against you in a time of crisis, and the reasons, frankly, they don't matter. You still lose your assets. Now, ever since the sanctions started, the West began tracing where Russia kept their money, and the bulk of it was found to be sitting in the settlement infrastructure, Euroclear. In the Euroclear Bank, Russian assets kept piling up, and by the end of 2024, the total amount frozen by the West stood at over $180 billion. And by some estimates, it's even more. Now, understand what Euroclear is. It's basically a settlement house for financial transactions. It's part of the underlying plumbing, the infrastructure. Whenever a big player buys, they sell assets like stocks and bonds. They are basically the middlemen when countries need to do big transactions. Think of it as a stockbroker with a bank connected to it. Now, Euroclear has three big functions: settlements, safekeeping, and the servicing of securities transactions. But China's big worry is the custody and safekeeping of these assets. When the G7 froze Russia's assets, they became immobilized and stuck at a clearinghouse. Clearly, they can't be moved out because the EU, well, they're still escalating the conflict with Putin. And if you're sitting in Beijing, you have to create an alternative system, not just for your own money, that's very important, but to provide the world with an alternative. Amid the chaos, this is exactly what China is about to do. They see this as a golden opportunity to split the world further from the unipolar Western financial order. Now, China, through Hong Kong, is pushing to create an Asian rival to the Euroclear system based in the West. Hong Kong is already an international finance hub where a ton of wealth goes in and goes out daily. There are two main drivers to create their own settlement house. Boosting global use of the RMB is a big one, but a more pressing issue is the need to protect their vast sums of wealth. By creating their own version of Euroclear based in Hong Kong, China will complete the entire supply chain when it comes to financial transactions. Now, settlement houses help to safeguard the assets and are in charge of transferring assets from seller to buyer. China will be able to give the world, especially members of BRICS, an alternative solution, alternative hub to transact in. And the more countries use this hub, the greater the chance of big players using the RMB more. They could use the currency to buy more RMB bonds or even Chinese stocks. Now, since the start of the war, the Chinese have been aggressively building up their entire financial system. We have the Enbridge system that allows digital currency CBDCs to be used, especially the digital yuan. It's a black box system that allows transactions to stay hidden. Not even Scott Bessent can figure out who's buying what or who is selling what. Very effective in avoiding sanctions. And just last year, the G7 banking giant HSBC joined China's payment system, the CIPS. HSBC says there's growing demand for trade in the Chinese RMB. And as China continues de-dollarizing their trade, banks all over the world, they have to join the Chinese payment system to take part of the action. You can't be a global bank and ignore the entire Chinese market. Now, China is building their own Euroclear is a natural evolution of what's to come, a separate financial ecosystem outside of Western control. Western countries like the US will be free to participate and even use it, but they won't be able to apply unilateral sanctions and freeze the assets of any one country. Like how semiconductors are existential to Chinese industries, building a separate financial hub is necessary in a multipolar world. For the Chinese government, they desperately want to get their money out of the West. Now, ever since Trump started this crazy trade war, it's insane for China to keep buying US Treasury bonds. You will be funding your own economic containment, and it's time to pull everything out. In 2024, China held a ton of US assets besides just Treasury bonds. When we throw in US stocks, agency bonds, and government debt, China holds more than $1.5 trillion worth. This is an incredible exposure that is 5 times larger than Russia. Not only are these assets held in US institutions, over $300 billion is held in Belgium. In other words, they are in EU settlement houses like Euroclear. Currently, the majority of their US bonds they are held by the Federal Reserve and big US custodian banks like JP Morgan. Now, all of which answer to the US government. To withdraw this money, China has to find a place to put it. And here's the problem. You can't put $1.5 trillion into physical gold without sounding the alarm bells. It will spike the price to high heavens. It just won't happen. It can't happen. And by setting up their own depository, China can channel their money back home and safeguard their assets better. Sure, it can be connected to the Fed or the EU banks, but control of the assets will be under the true owner, which is China. Beijing is also preparing for a future where trade with the US starts to collapse. Now, since 2022, China's overall exports to the US have been dropping. Their imports of US goods have also been stagnating. The tick up in 2024 was mainly due to front loading of trade, so don't let that fool you. But make no mistake, China's trade surplus with the US will continue to drop over time. And this would mean earning fewer dollars and having less US currency as part of their central bank reserves. China also won't be recycling them back into US Treasury bonds to fund Washington. And if that's the case, China needs to use their dollar holdings very, very wisely. They also need to transition their economy and trading partners to a world devoid of dollar transactions. And China's Commerce Minister has made this crystal clear.
中国已经成为150多个国家和地区的主要贸易伙伴，其中呢，共建“一带一路”国家占整个中国的外贸进出口的比重，去年也是首次超过50%。我们说西方不亮东方亮，北方不亮南方亮，没有把鸡蛋放在一个篮子里边，更体现了我们中国外贸的强大的韧性。
He basically told the world that 50% of China's total trade comes from the Belt and Road Partners, the BRI, and that Beijing's diversified approach to trade is not going to stop. In fact, it's going to accelerate. Now, this chart shows us the future of global trade and what has been happening over the last 7 to 10 years. Economic blocs like the BRICS and the G7 are trading more within themselves. Exports within each bloc, the top half, we can see a net gain across all countries. China exported 2% more to the BRICS, while the US also traded 2% more within the G7. The bottom half confirms a splitting of the world order. China's exports to the G7 fell by 5.2%. Russia and Brazil's exports to the West also fell by more than 3%. The same goes for Western countries as well. They are trading less with the BRICS, especially China. Countries want to trade more with their allies than their adversaries. Now, this is not ideal, but it's the world that we are in. China understands this and they plan to seize the opportunity to create their own financial system to really speed the process up. And that's why they are pushing for bilateral currency trade. Now, in the first 7 months of last year, China's cross-border trade in RMB increased by 21% year on year. It has hit nearly $6 trillion or 41.6 trillion yuan. That is a lot of money and the growth is astounding. Trump's trade war will only make things worse. Tariffs will make dollars hard to come by, exporters will have fewer units of the currency because they will sell less to US companies. And it doesn't matter who absorbs the tariffs, fewer dollars will go from US consumers all the way to foreign exporters. And since the start of 2024, the dollar has been ripping higher versus other currencies. A 10% gain for the dollar might be good for the US in certain aspects, but horrible for global economies, especially those that have a USD shortage. Now, it would have been a massive problem in the past, but we are now in a multipolar world where China can step in and help. Beijing has a $1 trillion surplus every single year that they can loan out to countries in trouble. But a smarter move today is to give countries access to their own currency, the RMB, just bypass the USD completely in global trade. Now, in January, China made a move that flew directly under our radar. They created a 100 billion RMB trade financing facility to help exporters and importers gain access to the Chinese currency. In addition, countries can now use RMB denominated debt as collateral to access cash. Just like how you can use US treasuries as a pledge for money, China is making it easier with their own bonds as well. And that's why building their own clearinghouse is mission critical. China wants to direct the flow of money out of the Western controlled system to their own. It allows countries, especially those in BRICS, to have an alternative hub to financial transactions. And this is very important because the era of US and EU sanctions aren't over. It's probably going to escalate, and Trump isn't doing the USD any favors with his constant threat to BRICS.
The first thing I said is any BRIC state that even mentions the destruction of the dollar will be charged a 150% tariff, and we don't want your goods, we don't want to partake. And the BRIC states just broke up. I don't know what the hell happened to them. We haven't heard from the BRIC states lately. They said, sir, what about the BRIC states? They're going to take over the dollar, the sanctity of the dollar. They're going to create a new currency to rule the world. I said, no, they're not. They said, yes, they are. So they said it. I said, no, they're not. Tell them 150% tariff, plus we're not going to do business with them. And that includes China. And all of a sudden they went to the BRIC states and they said, could I ask you, how do you feel about that? I have no comment on this. I don't know what you're even talking about. It was an amazing turnaround.
So once again, it's the same playbook. Tariffs are a type of sanctions, just in different form. But it does tell you the urgency Trump has to preserve the dollar, and he's using the only tactic left. But the cat is out of the bag. China isn't going to stop, and this process, whether you like it or you don't like it, it's irreversible now. But let me know what you think. Can China really challenge Euroclear? And how big of a threat is this to the Western financial system? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.